Well, in a rare display of bipartisanship in Washington, wow. Two congressmen have announced a plan to replace Fannie Mae and Freddie Mac, a tall order. They say it is a much better deal for taxpayers after years of turmoil. Republican Congressman John Campbell of California is joining me, as well as Democrat Gary Peters of Michigan, both of them joining me from the Hill. Congressman, thank you very much for being with us. It's a lofty plan. Perhaps, Congressman Campbell, you just outline it quickly for us. What exactly is the deal here? You want to get rid of Fannie Mae and Freddie Mac and replace them with 5 private companies?
Well, it's not necessarily 5, but what we'll replace it with is private capital and a private system. So there will be multiple, we call this a public utility model. And what you have is there can be any number of these, but a minimum of 5 of these organizations which will provide mortgage guarantees. They'll be heavily regulated by somebody in FHFA, a new regulator that will be very independent, kind of like the Fed, very independent in that regard. And then these entities will provide mortgage guarantees. Now, they will be able to purchase a government backstop for those guarantees that they will be able to purchase if the loans they're making meet the federal criterion. You know, if the loan amount is below a certain threshold and the down payment is above a certain threshold, et cetera, then they'll be able to purchase a government guarantee to go along with that. And what we think we're doing with this is we're enabling the market, the housing market, to have the stability of a government support, but it's really all private capital. These organizations will have to be very heavily capitalized. Instead of 1 or 2 of them, we frankly hope there's a couple of dozen of them out there competing in the marketplace, and that way if one of them has a problem or fails, the system won't go down, the others will all carry forward.
But Congressman Peters, to you, if there is still some sort of government guarantee, then that means that taxpayers are still on the hook.
Well, there's an awful lot of private capital before you get to that government guarantee. First, these are qualified mortgages that go into the pool, so they have very large down payments. And if they don't have the down payments, there's insurance that makes up that difference. There's substantial private capital that will be put into these associations. Plus, there'll be a reserve fund that is created as a backstop as well, similar to the model of the FDIC, where these associations pay into a reserve fund and they can tap that reserve fund if they get into trouble. And in fact, if that reserve fund is depleted, there can be an additional assessment against those private organizations and those associations to make up the difference. So there's an awful lot of capital before you get to the taxpayers. The taxpayers are there, but there's a lot of capital beforehand. What we're focused on is that we cannot have any more taxpayer bailouts of this. This needs to be a private system, a competitive system that brings in private capital and lets Wall Street do what it does best, which is raise private capital to invest in homes and across America.
But these entities, though, I'm trying to get a clearer picture of them. Are they ones that would be developed by whom, or are these existing entities?
They would be, and I don't know, Gary, you can chime in here if you want. They would not be existing entities. They would be new entities created. They would have one purpose and only one function, and that would be to provide mortgage guarantees. They couldn't originate mortgages. In fact, the mortgage originators cannot run or control these entities in order to avoid conflicts of interest. They cannot do anything else the way Fannie and Freddie went and got into other businesses. They cannot hold or retain mortgages. They will do one thing and one thing only, and that's guarantee mortgages. And so that's why we call it like a public utility model. And in fact, the price that they charge for those guarantees will be fixed by the regulator, at least at the beginning, so that we're not competing on the basis of price here. They can compete on the basis of cost for their investment money, but not on the basis of price. So again, like your electric company, highly regulated, a fixed price, the investors will more or less have a boring but pretty solid return. And then what they will provide is that stability of the marketplace, so that 30-year fixed rate mortgages continue to be available.
I'm just curious, and maybe Congressman Peters, you can take this last question. Have you talked with anybody from the private sector before you introduced this bill to see if this would even be attractive to them?
We have, and actually have been getting support from the financial industry. Financial Services Roundtable, for example, put out a press release yesterday in support of this plan. Mortgage bankers have been supportive, and we're continuing to build a coalition of support. Hopefully we'll be reaching out to realtors and home builders and all of the stakeholders involved in the housing market. It's important that we bring everybody together. That's part of this process. We've introduced this legislation in a bipartisan way. We're hoping to get a hearing on it soon, and then bring in all of the stakeholders homeowners in just a practical, common sense, problem-solving mode, and we believe this will be the way forward for us.
Congressman, thank you very much. Congressman John Campbell and Gary Peters with their plan to get rid of Fannie Mae and Freddie Mac.